Fest, Global FinTech Fest, organized by FinTech Convergence Council and Payments Council of India of Internet and Mobile Association of India and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. And we would like to also thank our partners, Platinum Partner Visa, AWS and PhonePe, Diamond Partner Cred, Country Partner Australian Government, Track Partner HSBC India and Refinitiv India, and Session Partner the UK Government Department of International Trade. Our next session is a panel discussion on taking Agritech solutions cross-border to improve financial health of smallholder farmers and build South-South engagement. Without further ado, let me introduce our moderator, Mr. Abhay Pareek, lead Fourth Industrial Revolution for Agriculture World Economic Forum, and our esteemed panelists, Ms. Michelle Kagari, Global Director, Government Relations and Policy, One Acre Fund, Mr. Arindam Datta, Executive Director, Banking Advisory, Rabobank, Mr. Kunal Prasad, Co-founder and Chief Operating Officer, CropIn Technology, and Mr. Joshua Su, Chief Executive Officer, Grow. I would request all the delegates to post their questions on Q&A tab, and we will address them at the end of the session. Over to you, Mr. Pareek. Thank you.
Thank you so much, and good afternoon, everyone. It gives me immense pleasure to welcome the esteemed panel, and there's a big agenda that we have today to discuss. It's an important one considering where we are post-COVID period, where the agenda largely focuses on agriculture. We know it employs more than 1 billion people across the world, and it's one of the critical livelihoods for a big population across the world, especially the smallholders who play a critical role in driving the agriculture production, mainly in emerging economies. But as we are talking about smallholders, there are emerging challenges that are affecting them day in, day out, especially the climate change, food security, now the pandemic, and also the issues around food wastages in the value chains. So these challenges, though, are there in most of the economies where we have been working, or are there in the emerging economies. There are learnings that are also emerging in these economies, especially from the use of technology and the use of emerging tech by some of the startups and the other stakeholders. Now, how these emerging technologies can shape the world is there for us to know. But there are learnings that are coming from countries like India, from Africa, and maybe from Southeast Asia, which can be exchanged not in just terms of learning, but also in terms of business collaborations. Creating that South-South bridge, I think, is the way forward. And that's what we are going to discuss today. How a South-South bridge between Africa, Southeast Asia, South Asia, and emerging countries can create solutions that can help smallholders improve their financial lives, but at the end of the day, improve the entire agriculture ecosystem as such. Building on this context, I'll start with my first panelist, Arindam. Arindam, of course, has a great experience in agriculture sector, of course, not in India, but across the continent. And from Arindam, your experience, just want to gain some understanding on how do you see tech solutions who have been making their mark on agriculture landscape, especially in emerging economies, as I've been saying, in Asia and Africa. Uh, how do you see them scaling, and what are the critical challenges that you see in their scaling? In your opinion, we would like to understand those 2 or 3 critical challenges at the ecosystem level that either the policy or the market level forces have to address in order to give impetus to these solutions to grow to next level and also achieve what they are aimed to be built for. Arindam, over to you. I'll just
to the farmers and to the markets, to the financial institutions to be able to make business decisions. Now, the issue of scaling up. Now, technology in the rural sector, because the information is there, it's not that the information is not there, but the information is not readily available. You need to capture the basic information, the static information, and the dynamic information of production and different crop cycles, that it requires also a physical presence. So, the first point I would like to make is you need a local anchor. So it's a phygital model for the time being, that technology by itself is not going to solve all the problems. You need the anchor organizations at the grassroots level. They could be agri SMEs, they could be procurement agencies, they could be farmer organizations, etc. Because even digitization of farmers is an expensive affair. That's point number one. So to scale up, you require partnerships with such organizations. The second is the cultural aspect of agriculture. Now, agriculture, especially in the smallholder context, is always done in a certain social and cultural context. Now, if you want to scale up your technology, say from India to Indonesia or to, say, Uganda in Africa, it's extremely important to understand the local cultural context in which farmers work and how farmers are going to consume technology. And that's going to differ. We are seeing that the way farmers consume technology across the world is different. Again, so you need local champions to be able to facilitate that. And the third point, the obvious point, is any technology working in another part, in another country, another geography, will have to understand local regulations, compliance issues, data policy issues, and of course, how the telcos in those countries work, how KYC, a simple thing like a farmer KYC for doing business, what is acceptable to the industry there. These are nuances which needs to be understood, and that's where you require local partnerships. I'll stop here, Abhay.
Thanks so much, Arindam. I think these are very important points, and as I hear you right, local anchor is one of the critical things that you're saying. And I think in local anchors, we can, if you allow me, we can also include governments, right? Because
Absolutely.
as we are hearing about data, that is a critical piece that governments are also holding, though in silos. And I think if they also come in together with private sector, that's another big enabling layer. But of course, the discussions around policy and local context is very important. One of the another critical aspects I just want to add here is investment, and that leads to my second question that I'm going to ask Michelle to you. Coming from an investment perspective, building on what Arindam said, what are the challenges in scaling up? Do you see investment is a critical challenge that also is important to build the agri-tech ecosystem in a country? Apart from countries such as India, where the markets are huge, the startup ecosystems are matured, and then there are investors who are ready to put money on. But in other emerging economies where the same challenges are there, the technology can play a big role, but the investment may be lacking. So, how do you see what are the avenues to unlock potential, investment in these such economies for agri-tech or agri-finance? And who do you see are the main actors who need to collaborate at the south level, to have that investment rolling from maybe emerging or mature economy to emerging markets. So I'm coming from that perspective. Look,
Sure. Thank you so much, Abhay. Yes, you're right. Investment is key in order to incentivize and support innovations to build on agri-tech ecosystem that solve some of the most pressing challenges that are facing our food systems. So avenues to unlock investment and strengthen agriculture value chain systems from farmer to consumer would include an enabling policy environment, as we've already discussed. You need a policy environment that maximizes public and private sector investments in agriculture. So in addition to the policy areas that were mentioned previously, I'd add that you need enabling policy on the land tenure, democratization and delivery of access to inputs, technologies, and finance. And governments have a central role to play here to put in place the policies and create an enabling environment that will incentivize investment in the agri-tech ecosystem. The second avenue would be to invest in research that identifies the barriers across the entire value chain and come up with innovative solutions that are tailored to the specific ecosystem that you're in. In this, what I'd add is that it's really important to take a systems approach in investments that strengthen the entire value chain in order to build a sustainable agri-tech ecosystem. So this would include like developing innovations and putting investments in the input side, aggregation, processing, high value export markets, etc. And then, as has already been mentioned, because if you want something sustainable, it's really important to leverage partnerships. Then that would be another avenue to unlock investment, where public-private partnerships would be put in place to consolidate value addition and deliver impact at scale. And then finally, definitely building on local capacity, as was previously mentioned, you do need to build smallholder farmers' capacity and other value chain actors, including SMEs, to interact effectively with the tech solutions that are coming in. Beyond those avenues, though, I think it's really important for us to acknowledge that there are already agricultural innovations and technologies that are being developed. And one of the issues that we're facing in the South is that smallholder farmers do not have the same access to these innovative new tools and services that wealthier farmers in the North are increasingly benefiting for. And our global food systems will remain vulnerable until we find ways for all farmers to have access and benefit from these technologies. So we need to find ways to collectively and effectively deploy agricultural innovations and technologies to build more resilient agriculture value systems. More specifically, what we need to do is to democratize access to precision agriculture, for example, ensuring the scaling of productive knowledge to the poorest farmers of the planet. If targeted, data-driven precision agriculture information can be provided to smallholder farmers via cost-effective and accessible technology, then hunger and malnutrition rates for this population can be substantially lowered through their own ability to grow more food and meet their daily nutritional needs. Key inputs can be drawn from existing ag tech companies that already generate precision agriculture recommendations through collecting, analyzing, and distributing information to farmers. For example, we could use targeted SMS for feature phones or smartphone apps to push out messages on seed variety choice, fertilizer choice, and advice on when to plant, when to harvest, etc. Finally, the opportunities that I see existing for South-South collaboration would be in a number of areas. So definitely actors that are involved in improving agricultural productivity through increased access to inputs and technologies, finance, extension services, post-harvest technologies and markets through collaborative platforms such as these.
Michelle, can you hear us?
I think we have lost Michelle a bit.
Yeah, I think she was coming to end of her reply, so I think I can pick cues from what she was responding to, and I hear three critical things here. One being, of course, the public-private partnership as the way forward to enable that access of emerging technologies to the last mile and poorest of the farmers, and also a system approach, which is very critical to ensure that whatever is being developed is catering to the requirements of the market. But that also leads us to a question that, with all being there, what are the ecosystem requirements that we need to put in place in terms of all these technologies to grow? And Joshua, I would move to you now for that question coming from your experience of grow and nurturing some of the great startups. Um, the ecosystem challenges you see are similar; they are common across emerging countries. But how do you see the South-South exchange as a way forward, or as a vision that can unfold newer opportunities, creating a thrust for the agriculture sector? And if it will be really great if you can share some of the examples that has happened. Actually, we have been talking about it, but how it happened and where it happened, we'd love to hear that as a way forward.
Sure, thanks, Abhay. So I think there are two parts to your question. The first part is, what are some of the opportunities that can arise from a South-South exchange, which I'll tackle first, and then the second part is around some examples. So I do see that a South-South exchange creates opportunities and trust for the sector in two ways. One is it highlights new markets where agriculture and food technology startups can scale into. And secondly, it's the transfer of technology and benefit from these solutions that can then better the sector as a whole. So I'll dive into the first point first. In terms of what I mean by unlocking new markets to scale. So touching on what Arindam was saying, that like startups with a technology, they do want to scale. And so if they're looking at beyond their own home markets, then taking a South-South perspective of lens is a very useful way of identifying which new markets could be the next logical market to go into. Taking the assumption that the challenges and opportunities are quite similar across these markets, and also recognizing that there are nuances, local nuances that are quite different, at least it gives some sort of basis to sort of assess whether or not the value proposition in the home market will resonate in the new market. And if so, then what are some parts of the business models they'll need to tweak so that they can then successfully, be based in this new market outside their home markets. Which then leads me to the next point around, transfer of technology for the betterment of the sector. So this is assuming that the Agritech startup has a strong technology, has a compelling value proposition, and also is impact focused. So when this startup is successful in, planting into in the new market, then naturally the benefit of that service and solution would then translate into the new sector, so that you transfer the technology, the knowledge, and the benefit for the overall sector. I do want to add that, when we approach this kind of, scaling across the region or scaling between, different parts of the greater South, I want to recognize that we do see two things. One is best practice and also local brilliance. Best practice is what I would probably term, like a good technology or good solution coming from another country and then entering into a new market, because you bring the best practice there. But I also want to recognize that the importance and significance of local brilliance, of having local founders who understand the market, who understand the farmers there, and able to then develop solutions for the whole market's needs.
My key takeaway here, I think, Josh, at the last that you said is bring the best practices, but localize it, contextualize it to the farmers and their needs, and learn from them also when you're bringing the technologies.
Absolutely, yeah.
Which can be created. Great. So now I'll move to an implementer, Kunal, being there, and Kunal, would like to hear from you now. From an implementer's perspective. Of course, this entire vision of South-South collaboration opens a big market opportunity for the startups or for the emerging technology providers. But having said that, it's not easy to create those bridges. There are ecosystem challenges that might not be created and need to be addressed from the new markets that you want to venture into. So I just wanted to understand from your perspective, from a implementer's perspective, what are the opportunities as well as the pitfalls that you see in such a vision and how they can be addressed going forward.
Yeah, thanks, Abhay. So, as a tech company, we just a quick introduction is that we have built in that a full stack technology across the agriculture value chain, from production to supply chain to traceability to financial linkage to insurance to market linkage and things from that. And what we have realized is that when we go across different, and a good background is also that we started off in India and we invested in building, understanding the local nuances, building partnerships, and in the initial 4-5 years we could do that and understand agriculture, the needs of the stakeholders that we engaged with, and that gave us a learning that B2B is a model where we could actually leverage the knowledge and the expertise of the partners in that region, and then enable them using a technology so that they can intervene and make it scalable in that particular region. And with that approach, once our technology stack was ready, we started going outside in different markets. So what we do essentially is we focus on technology and the best in class solutions around AI, satellites, data collection, data reporting, analytics, and things around that. And then the local partner, which is could be a bank, could be an insurance partner, could be a farming company, could be a commodity trader, then brings in their own knowledge into the system, and collaboratively then we implement the entire program. So essentially, that also helps us in terms of getting the results faster, because we have different learning and experiences of implementing programs in some part of the world, and especially in the south when we are talking about smallholder farmers. Primarily, the challenges and the opportunities are almost similar. In some of the markets, we would have advantage that you would have a structured data available which you can leverage. Like for example, if you're talking about industry like in a financial fintech industry in India, you would actually have access to some of the land record data where the government has already digitized the farmer information and basic information. So you can leverage that, and basis that you can do some analytics on top of that and provide that services to a bank, which can leverage that to bring efficiency in terms of going to even the smallholder farmers which were not getting access to finance earlier. Now this is a learning which is already taking some shape in India, but actually this could be implemented in other parts of the world as well, where we can collaborate between the public institutions or the governments to help them integrate the data platforms into bringing this particular services in their markets. The second thing is also about if your model is B2C, if you're directly engaging with your farmers, then the approach will be very different. It could not be a B2B approach, because then you will have to understand the nuances. You have to understand the practices followed in that particular market. You have to understand the regulations. You have to set up your business, data policies. A lot of these things has to be taken care of. So I think it's all about your model of engagement. And what we have seen in our experience is that as a tech enabler, we see the entire globe as a market, but the platform is structured in such a way that you can actually customize and configure that into a smallholder local experience for the customer, and then they use the technology with an integration to their own applications and platforms to provide an end-to-end holistic solution for the customer. I think that's the model of scale where we are able to reach out to a large number of farms across.
So Kunal, just one addition to that, if you're entering in the new markets, what are the key one or two things that you would look for, as an enabling layer that should be there for you to enter that market?
So for us, I think the partner is very important. As we say that the B2B partnership. So when we go to a market, we find a strong partner. So if we are entering into a seed industry, we then find the top 10 seed companies in that particular market. If we are getting into a fintech sector, we then find the top banks, which are innovative banks in that particular market, and then we go and partner with them and try to do pilots and then engage in that particular area. So I think finding the right partner in the program that you're building is very important. Otherwise, the focus would be lost. We also see government as a very strong partner. And especially in the South Connect, we are also seeing a lot of funding coming from development partners, which are putting in funds in terms of creating certain models and implementing that at scale. I think it's a mix bag where you have to think about collaboration with government, private sectors, leading institution, as well as the development sector to have your holistic approach.
Well, thanks so much, and I think that's really helpful. So three things I hear is, of course, local intermediary or a local partner, the data and the collaboration with the government as a critical partner in the entire thing, and then having those local understandings of the ground if you're going into a B2C model, right? And just to add to here, at Forum also we were working on a project with Telangana government here in India, which is focused on a public-private partnership again, on the similar lines of having those enabling layers for private sector to scale the technology. So I think these things are coming up, these solutions and these partnerships are coming up, but we have to see how these bridges happen also between emerging economies. But as we've been talking most from the supply side, I just want to take a flip side and think more from a demand side. Whatever we are doing as in our capacities is all focused towards how we improve the financial well-being or financial health of a smallholder farmer, improve their income through different means. But from a demand perspective, just want to understand from you all, what are those 2-3 non-negotiable factors, that can act as the biggest catalytic factor for adoption and sustained activity by the smallholders? We see that the advisories are being rolled out, but they may not act on it. we see, offers, credit products are being rolled out, but they may not ask for it. Uh, what are those two, three factors that we should focus on to make sure that smallholders are also adopting or accepting what is being offered to them? And then a follow up to that is just to understand, there is always a question that will the farmer pay, or should there be an alternate pricing mechanism? So I'll just take a pause here, and maybe Kunal, I'll start with you and then again go back with Joshua, Michelle, and then lastly Arindam to understand their viewpoints.
So especially like now to answer on the demand side for the smallholder farmers, I think the demand is already there right now. If you see majority of the farmers across these markets, right, they are actually going out for access to finance, right? They would either take a formal financing, like in the case of India, if you see the percentages are varying. Like now, when you're a large holder farmer, you would have almost 70-75% of farmers which are actually taking finance from like banks and other microfinance institutions. If you go down like towards the smallholder farmers, the percentages decrease. Not only from the percentage of farmers which are availing the loan, but also in terms of the quantum of loan that is there, right? So these are some of the factors which is there. So the demand for the financial part is always there. And when we are talking about a change or a transition, right? A lot of this is pushed back to the farmer. That if you're talking about moving towards more sustainable agriculture, making it more regenerative, then is there a cost element of change which the farmer has to bear, right? And we have to be very, very sensitive in asking and building the ecosystem around the farmer, so that a part of that cost is borne by the ecosystem. So that answers the second question as well, that a lot of time we expect the farmer to be paying for the services, which is again an additional burden to the farmer altogether. But rather, there is quite a value of the ecosystem to come and play on the data system that you have, and pay a small part of the price that they're already paying to get that particular service. Just to give you an example of a bank, if a bank is spending say around $20 to $30 for evaluating a loan account for a farmer, using a tech solution, they can do it for $2 to $3, right? Using some of the creditworthiness models that we're building to access the farmer's land, and then have the historical data, crop performance, and a credit score for the farmer, just like a CIBIL score, which is there for the regular customers like us. So I think it's a overall it's a system approach, like which has to be understood and implemented in such a manner that the smaller farmers is at the nucleus of that, and then we create the wrapper around bringing all the other stakeholders to engage with them effectively.
Thanks, and a great point about creating efficiencies using technology and then using those costs to maybe drive the adoption. So maybe Joshua, I'll move to you and would love to hear your perspective.
Sure. Yeah, I'll answer it in a way. So when we talk about adoption of new technologies, right, it's essentially we're introducing something new into the world of the farmer. And so I think to answer your question around what are the 2 or 3 non-negotiable factors, I would say somehow, even though it addresses the demand side, it still touches on how the solution or technology is actually being designed. So I would say the 3 things to ensure maximum or catalyze the adoption would be, one is, what is the farmer value proposition, or in other words, the customer value proposition? Is it, if I'm the farmer, is it really solving my problem? As we heard from Kunal, the demand is already there. So you need to make sure that whatever that is, it does meet that demand directly. And next is the user experience. So can I use it daily? Like me as a farmer, can I use it daily? And if it was taken away from me, will I actually miss that product or service? And thirdly is the business model, which is around, can I as a farmer own it? Which leads to your next question around, who should the cost be borne by? And I think Kunal said a really good thing around the ecosystem, taking that bigger perspective. Here we are, looking at ways to, improve the livelihoods of smallholder farmers. And so I think it's counterintuitive if the business model of a agri-food tech venture is looking to actually, monetize from the smallholder farmer. So instead, I think we need to be quite creative in looking what could an alternative business model be, where it's either, collectively, the profit is being taken from the outcome of how, the services have been provided or rendered. Or maybe it is, like you say, finding another stakeholder group who has a much more vested interest in ensuring the success and welfare of the farmer, who could then be the one that bears that cost. So yeah, that's my view.
Thanks so much.
Oops, sorry, you were muted, Abhi.
Yeah, thank you so much. No, I'm hearing this point, which is very critical one, is let the ecosystem be more efficient and bear the cost. Let's not transfer it to farmer altogether. It's hard. It's not right to pay them to change and as well as pay for that change also. So that's a valid point. And Michelle, now over to you. What is your perspective on this question of farmer adoption and then the pricing mechanisms around that?
Thank you, Abhay. I agree with what Kunal and Joshua have said, and that's certainly the part about recognizing the ecosystem definitely resonates with the experience that One Acre Fund has had. We have definitely found that smallholder farmers will have multiple barriers to either accessing markets or accessing inputs, accessing information. And therefore, any tech solutions, if they're only focusing on one part of the system, and don't recognize the other parts of the system, then that would still have diminished outcomes for the farmers. So it is really important to take a step back and look at the entire ecosystem and then proactively work in collaboration or in partnership with other actors so that you have multiple interventions that strengthen the entire system. We've talked a lot about the smallholder farmer experience, so I'm not going to go into that. But additional areas that are critical in terms of demand and that again go to the agriculture value chain are we can't forget interventions or tech support to improve the infrastructure that will strengthen the agriculture system. So definitely interventions to improve like road infrastructure, logistics is a big one, storage solutions are quite important. And then obviously deploying tech solutions that can help increase adoption of climate smart agriculture technologies would be important. And then increasing scales through systems change, partnerships with government. And then finally, what for me would be another must-have would be how we leverage the tech solutions that we've got to really ensure that they become accessible and affordable to smallholder farmers is important. So, like I said earlier, democratizing precision agriculture methods and other tech methods so that they can benefit smallholder farmers as well. Thank you.
Thanks, Michelle. Thank you so much. And I think democratization is just definitely making that equitable access to technology is one thing, and pricing is a big issue in that we all have been hearing. So thank you so much for that perspective. Arindam, now over to you. Just wanted to hear from your side.
Yeah. Thanks, Abhay. I think we heard some great remarks from Kunal, Joshua, and Michelle. Very little to add there, but I would like to give you a live example of an initiative that we have taken up. And Abhay, you're well aware of that, but for the information of our fellow panelists and the participants, that we have started a South-South Corridor initiative. It's being championed by UNCDF and being supported by us, Bill and Melinda Gates Foundation. Bayer is the private sector partner, and IFAD is the knowledge partner. So we are trying to take tech solutions which have worked in reasonable scale in India to other parts of the emerging markets, specifically in Africa and Southeast Asia. Now, this is a very ambitious program, and we understand how complex it is to take technology to another geography. So a couple of things we have done. What we have done is we have identified, as has been mentioned by all speakers, very strong host organizations in 7 countries across Africa and Southeast Asia. That's extremely important. And we are going to help these tech companies with the finest of support when it comes to legal compliance, technology issues, policy issues in the local geographies, and also help them to have tie-ups and other kind of joint ventures with local ventures to be able to transfer the knowledge and the technology to other parts. Now, we are trying to address only the smallholder farmer problem, not the other issues. And so it's extremely important. The learnings in India, because of a couple of reasons, the kind of entrepreneurs we have in India, and we have got into technology. I mean, it's a best in class engineers and business school, graduates and people with 25 years of Silicon Valley who have worked in other sectors. Now they want to work in the technology sector in agriculture, and it's all being fueled by private capital. That's extremely important. There is hardly any donation or grants available in the Indian market. So they are charging, and I do feel that Indian per acre, and that's something I think Kunal can also comment on, that per acre, per farmer charges is among the lowest in the world. Huh? And the fact that the scale is so large, 140 million farmers, of which 124 million approximately are small and marginal, it gives a lot of room to be able to do your pilots, to be able to understand the ecosystem, to be able to understand the complexity. There are several agroclimatic regions in India. There are different commodities grown at different times of the world, the water availability, the climate challenges. So all of them gives very good learnings, and we hope that we can make that happen. Actually, Abhay, what you're talking of, and it's getting more and more complex. We are getting as many partners as possible to make this possible. But even if we can take 3 to 5 companies to other parts of the world, I think that would be extremely exciting, because the belief here is that technology need not be reinvented. If it's already doing well and it's working in the smallholder ecosystem, which is extremely complex, as Kunal mentioned, then why reinvent that technology and go through the steep learning curve again? Why not use the same technology in another part of the world? I'll just stop here a bit.
Thank you so much, Arindam. And I think uh, if I summarize the discussion and the points here that I've just been hearing, is that let's just focus at the ecosystem level. Agriculture cannot be is a sector that cannot be addressed in silos. We have to take a holistic ecosystem approach, identify local partners who understand the geography and the context well, focus on PPP. That's a way forward. Government is a critical partner to enable the entire ecosystem. They have the data, they have the other infrastructure that are important to roll on the ground, and look for avenues where South-South exchange, just like as what you shared about UNCDF, can be created. But at the same time, make sure that the data, the information, the technology is democratized. It's accessible for people. It's accessible for smallholders. Let's just take that way forward. And I think that's a summary I want to take forward from this discussion. But we still have time for a few of the questions, and I see at least 2 questions coming through. I'll start with the first one, and any one of you, if you want to answer that. It talks about the challenges on the ground, right? In the rural geographies, about low telecom penetration, uh, feature phones still being used, low literacy levels, the trust factors around financial inclusion. And considering all this, the question is, how do you bridge this digital divide and make sure that the people are adopting technology, especially on the fintech side, especially at the bottom of the pyramid level? So that's the question: is how do you overcome these challenges and make sure there is adoption of fintech at the last mile? So any of you want to take this question?
I think Kunal would be in the best
Yeah.
position to take this up. But having said that, that's where again what all the speakers are talking of is partnership and collaboration, because all these challenges are there. They are for real across the emerging economies and especially in the rural areas. So, but it's partnerships which are going to enable this. But over to you, Kunal, if you can give your comments from your experience.
Yeah, so I think rightly said, the challenges are there, and it's all about how you partner and implement the program in the rural areas, right? If you see the farmers, you will also have the distribution of the farmer. It will start off with farmers. Even if he's having a 2 acre land, he may be growing grapes or say pomegranate. So it's a high value crop. The farmer could be considered as a net revenue could be higher, but supposedly in the same manner, you have a 1 acre farmer which is growing say soybean in some remote area in a state, right? His income levels will be very low, right? So within the same acreage, you would see that there is the income levels of the farmers are very very different, and the type of technology interventions that we can bring in is also very different. So and that's where the localization and the need based intervention is very important. Where the technology can play a very very important role in basically removing the asymmetry of information which is there, right? So right now banks are not going into that level of detailing because the cost of intervention is higher. How can we basically bring technology as a layer to open up that asymmetry and show the entire information to banks so that they come and partner? So I think first is understanding the entire stack. Second is in terms of the implementation, right? And I think we all talked about it earlier as well in the discussion from India and Africa and other experience as well, that the way to engage with the smallholder farmers is to have a very, very strong implementation support, right? It will have farmers which are not even having the smartphones. They would depend on whatever a lead farmer is doing in his areas, and if he's doing something and he's being successful, then the other small farmers will follow them. Then you will have farmers with the small the basic phones which are there. Then you have the farmers which are having smartphones. Then you have the lead farmers which are exploring different technologies. So you have a stack of all of these farmers, and in your program you will have to have these as a key enablers, and then smaller farmers which are being supported and also learning from what's happening in this area. So I think it's more about designing the program, understanding the local situations, and it can also vary depending on the crop, the aspirations of the farmers and the challenges in that particular geography. So I think that's how we have seen that now our different programs are very, very customized to the needs, and then we bring in we have a stack of say 50 things, but we say, okay, let's start with these 5 things: basic digitization, knowing the location of farmer, the crop, giving them advisories, giving them say IVRS based advisories and SMS based advisories, then doing a lot of training on the ground by training, mobilizing, let the farmer believe that it's actually bringing a change in the area, and then they start adopting in the second or third season. So it's a learning, and an agriculture transformation is not a short-term process. I think it's a process which needs certain patient capital and patience in the institutions which are coming in and working on the ground.
Thanks, Kunal. This is really helpful, and I think customization is the way forward that you're saying, and understanding the farmers, keeping them at the core of what we are creating. That's the way forward, right?
Absolutely.
Yeah. So I move on to the second question. That's coming from an aspiring startup entrepreneur who's saying, if I want to leverage the banks in my startup in an agriculture sector, uh, how should I do it? How should I go about it? Creating those connects with the bank and creating a fintech in agriculture sector. So what are the 1, 2, 3 key points I should keep in mind?
Well, I'll just make one small comment here. Now, what is valuable for a bank? What enables a bank to cut down on its transaction cost? Because originating farmers or small businesses in the agriculture sector is very, very expensive. Monitoring is very, very expensive. Providing loans or financial services are very, very expensive affair. And similarly, the risk of doing such business is very high. So they have to make high provisions for agricultural loans, for farmer loans. So any technology which enables the bank to underwrite its agriculture portfolio or the smallholder farmer portfolio better will be welcomed by the financial institutions. It means ultimately data at 3 kinds of data. One is the static data, as Kunal mentioned, the land data and all of that. Second is the dynamic data, the production, the seasonal data. And third is the assurance that the data you're providing is authentic, it's verifiable, and then it's trustworthy and it's actionable, right? So any technology which brings in data which is helpful for a bank to underwrite and to cut down on cost will be most welcome. And only technology can do that, because otherwise physically doing all this work is extremely, extremely expensive for financial institutions.
Thanks, Arindam, for those points. Josh, Michelle, Kunal.
Yeah, I might jump in. I think there's 2 parts to this question. One is how do you leverage the bank in the startup? And I think maybe something to think about would be looking at who are your users versus a buyer and maybe a beneficiary. And if you can identify where the bank actually sits in that equation, then you can better design a proposition to engage the bank within your startup. And then scrolling down, you're asking, how do you start? I think you wanted to start a technology in agriculture sector to implement technology? And how would you go about starting on this? I guess three things I would say would be: one is immersion, two is test and design with your user / farmer, and three, fail fast frugally. So with immersion, I think it's going to meet the farmers, talking to them, so that you can understand, are you really solving a problem that they're facing, and is it unique enough? Are there no existing solutions that's actually addressing the problem, because you don't want to be creating something that is already in the market. And then the next point around test and design with the end user, I think it's good to very early on just create a prototype and put it in front of the farmer and say, does this work for you? And if it doesn't, actually involve him or her in the refinement of that solution. And then the last point is fail fast frugally. It's what we always tell our startups is, you learn most from when you fail. So try to not incur very hefty, expensive mistakes, but, do small experiments to learn, and then use that learning to slowly grow and scale your business.
Great. Thank you so much for these points. Kunal, you?
Yeah. So from my bit, I think when we are engaging with the smallholder farmers, I think the space that we have to operate is the agri fintech space. It's not just fintech in that particular domain, because it's a very high, as Arindo was mentioning, that the cost of lending is very high and the risks are higher. So how can we bring agri expertise also in that particular asset and help that asset to perform better? So if a smallholder farmer is taking a loan of say like $1,000, can I also advise the farmer? Can I make the farmer climate resilient? Can I help the farmer to connect them to markets? If these are the other value additions that we can bring for that particular farmer, then the risk of financing to that particular farmer reduces. And I think that is the role which AgriFintech like CropIn is playing, that we are not only helping the bank to find the opportunity of lending, monitor that and recover that, but also when a bank is lending to farmer, also ensure that from all technological intervention to help the farmers to be much more productive and profitable in his own business. So, and we are seeing a lot of traction from banks which are looking into that part of the overall engagement with the farmer as well.
If I may add to what Kunal mentioned, Abhay, now what we are seeing in the market is a mushrooming of fintech companies and also of agtech companies who have rich data of the farmers. Now there are three challenges. One is the system integration with the financial institutions. Most of the financial institutions don't want to open up their core banking system. Now that's a big technology challenge. Second, what we're seeing is the KYC and CDD challenge. That can the fintech companies, provide basic data of the farmers, which is acceptable to a bank from a regulatory perspective, right? Third challenge that we are seeing is now for the underwriting team in the financial institutions of how they incorporate the data or the credit score being provided by the fintech. And does the fintech have the ability to also imbibe all the information present in the retail bank with the data that it's collecting? So does it have a robust model where it's not only its own data and analytics at work, but also the data which is present in the ecosystem, especially the banks, how easily are they getting integrated in the system? So these are challenges, but we are seeing a lot of traction here on this space and a lot of pilots being rolled out in the market, in the Indian market, where a lot of fintech companies are trying to unlock capital from the mainstream financial institutions. And that's a very exciting space because if you want to deepen the outreach of the banks, technology is the way forward, again, because of transaction and risk cost. Thanks.
Yeah, thanks, Arindam. I think that was the sentiments that the Deputy Governor, I think on the day one of this fest also shared, is that technology is critical to deepen that last mile reach. Of course, banks are here to stay, but the banks that adopt the technology and the fintech partnership first are the ones who will scale first. That's I think is a key takeaway from this question. But I think we're coming to an end to our panel. Michelle, if you have any points to add.
Thank you, Abhay. I agree with all the points that were raised. What I'd say in addition is As Arindam said, this is a very exciting sector to be in. There's a lot of innovation. There are lots of startups. And there are also alternative financing sources. So banks are definitely a critical stakeholder, but we are seeing increased lending coming from impact investors. So definitely being able to tap into forums of impact investors, individual investors, that's also can be a source of funding. I'd definitely underscore what Joshua so said. It's really important to pilot your solution, see if it works, refine it, come up with a plan to scale, because when you're scaling, additional problems come in that would not be identified at the pilot phase. And yeah, definitely working with a range of financiers beyond banks. Thank you.
Well, thanks for those inputs and taking that another view of including impact investors in the entire spectrum. So, as I said, we're coming to the end of the panel, and thank you so much for all your views. This was really enlightening and learning for me individually also to understand and have that vision of South-South exchange as we have been discussing. Understanding the ecosystem is the critical way forward, and gaining that perspective, let's democratize the technology, let's make it easy for use for everyone, understand the local context, and have local partners. Thank you so much, everyone. Thanks, Michelle, Joshua, Kunal, and Arindam. Thanks for your time. Over to MC.
Thank you, Abhay.
Thank you, Mr. Abhay, Michelle, Kunal, Arindam, and Joshua for such an amazing and insightful session. And I would also like to thank all our delegates who were a part of this session. So thank you so much for giving us your precious time. Thank you.
Thank you.
Thank you.